Hi folks, Lee Gettess here with the Market Sense for the week of September 2nd, 2014. We'll look at charts that come from the Trade Navigator software. Their new slogan is the power of awesome. We're looking at a weekly bond market chart, and let me say we have Monday on Tuesday this week, so it makes it a little different than a normal analysis. But bonds have been going up all year virtually, and they were looking really, really good right up through the early close last Friday. And after the close, I mean a couple hours after the close, they suddenly dropped, I don't know, 10, 12, 15 ticks in like 10 minutes. And they've really been going down ever since. They went down over the weekend and they went down once they opened here Tuesday. They could have held up. Well, I thought they were going up here to 140.23 or so, but instead they've broken down through everything, even the middle moving average here, 139.06. They don't appear to be holding that. So it sure looks like they're heading down to the 138 area or just below, which is the lower moving average here. Now, I got to put this in perspective. If they were to drop all the way down to the mid-Keltner channel, and I'm not saying they will, but if they were to drop all the way down there, that's, let's call it 135.24, that would still leave them well above the previous swing low here on the weekly chart. So they could go down a long ways and not really do damage to the long-term uptrend here. So, you got to keep that in mind. I thought they would go higher, but I can't be pushing the panic button just because they've turned down here. There are multiple levels of support that could hold them and still kick them back into an uptrend to last a while longer. Doesn't mean they're not turning here. They could be. I mean, we have a little divergence in our indicator here at this high, and it's turned down below its moving average. So they could go down from here. But I just want to say I'm just not panicking right away that and assuming that I have to go short, because there may be a chance for them to bounce from someplace in here, and they could even just reestablish the uptrend. So be patient until they tip their hand a little bit. We do have the unemployment report on Friday that could settle things one way or the other. Stocks, boy, look at the size of those weekly ranges. Yeah, they've been going up strong, but just shrinking and shrinking and shrinking. It's like they're going up because there's nobody home. It's really a little frustrating. They haven't traded support for a while now, so looking at support down here in the 1974 area, just below 1975 anyway, seems kind of silly. If they're going to continue up, they probably won't go down there, but if they do, it's support. It really looks to me like the critical area is up here, 2006-7, up here in this resistance. Boy, if they start trading above 2007, I'm not sure you can find more resistance. I mean, they might just explode higher if that's the case. And it's also possible that they could back off to 1974 or even all the way down to 1955. I mean, again, look at where the last swing low is. They could go a long ways down and still be in pretty doggone good shape. I don't really understand what's driving them. Well, nothing. I mean, that's really the bottom line. I mean, you get bad news, you get saber rattling from the Russia-Ukraine situation. They don't care. They just go up. They drop for the first hour or so in the morning, and then they turn back up. They're gonna care at some point, and they're gonna turn back down. But until they show us that they are, I think you just got to be mindful that you can't assume this is over. They could explode higher, and again, going above 2007 would suggest that that's exactly what they're going to do. So that's what we've got for you today. Hope you can find something profitable to get yourself into this week. And again, be careful of that unemployment report on Friday. Thanks for checking in with us.